All right. I want to say thank you for joining us today. I know there's a lot of events going on at FinTech Week. I'm really grateful for you guys to join us today to listen to some of the thoughts, opinions, and conversations we're going to have with some of our panelists from Unit 21, Treasury Prime, as well as Bangor Savings Bank and FinTech Business Weekly. So real quick, before we jump into it, I wanted to cover a few things. My name is Aditya Vempati, and I am the head of marketing at Unit 21. And for those of you who know us, you probably know we're the risk and compliance infrastructure, and we help a lot of people in the space fight fraud as well as stay compliant. And for those who don't know us, you'll get to know us better today. And with that, I want to kick off a few things that are pertaining to the topic at hand today, which is around combating fraud. In about last year, late August 2022, we actually conducted a survey across 231 fraud and AML and compliance and risk professionals. And we did this survey because we wanted to understand what are the key challenges, problems, and priorities that our potential prospects as well as customers have. And we wanted to make sure we were a resource for people to understand what they need to prioritize and what they need to tackle. In doing that, we found a few key things were top priorities in the next 12 months for compliance and fraud and risk folks. The biggest one was 78% said meeting compliance requirements and the ability to rapidly alter rules was a big priority. The next one was reducing the impact of fraud on revenue as well as reducing false positives. And then the last one was onboarding users more securely. And a lot of these, if you look at the themes, it's a lot of enabling compliance, fraud, and risk professionals to have control back to be able to make changes rapidly. A lot of the situations that we found through the survey was most people are relying on engineering, and most of the time they get less than 15 hours of engineering resources a week to make changes as they need. And with that, it comes to the key challenges that these compliance, fraud, and risk professionals are tackling. And the first one was identifying new fraud schemes. This is the biggest thing. They may be able to find it, but they're not able to tackle it right away because they're often waiting for engineering backlog, or they can't make the changes to the rules themselves, or the vendor has to make the change versus them. The next one is getting the actual engineering resources to make the changes to the systems. Again, going back to fraud doesn't wait for your quarterly roadmap. It comes when it comes. You got to be able to tackle it when you can and right away. And the next one is decreasing false positives. And this goes back to updating your rules, being able to know what rules to deprecate versus which ones to prioritize, and as well as make aware for the entire organization. And the last one is modifying the current tech to catch new fraud schemes as they're hit by it. And as you can see, this theme goes back to the priorities are being able to make changes, being able to address things rapidly, and the pain points are revolving around not being able to address things rapidly, not being able to make changes. So with that, I want to kick it off here and give some introductions. Start off with yourself.
Hello, everyone. For those who don't know me, my name is Jason Mikula. I spent about 12, 13 years in the consumer credit space. Currently, I research and write a weekly newsletter, FinTech Business Weekly, as well as advising and consulting with early-stage startups.
Hello, everyone. Diane Porter. I'm from Bangor Savings Bank. I am a senior vice president there. I am the director of financial crimes, and I am a 25-year veteran banker.
Hi, everyone. I'm Jeff Nowicki. I'm with Treasury Prime. We are a banking-as-a-service operating system for banks to expose out a new business line or a new opportunity into the embedded finance or banking-as-a-service space. I am a former banker, so I come from the banking space. Spent many years with Radius Bank before the Lending Club acquisition, and then a few other community banks. So know this problem very well.
Hi everyone, Alex Vojvosovich, head of fraud risk for Unit 21. Been in the fraud prevention space for about 15 years. Fraud operations, fraud analytics, managing teams, creating fraud strategies, and today I lead the fraud strategy with Unit 21.
All right, great. Of course, myself, Aditya Vempati, head of marketing at Unit 21. So one of the key things that I also want to touch base on, we were recently looking at fraud and understanding why it's become such a key issue to a lot of companies, right? Talked about the survey, but the biggest thing is, in 2019, consumers reported about $1.8 billion of fraud had taken place to them. At the end of 2022, that number has gone up to $8.8 billion. So you're talking about almost a 7 to 8x increase in 4 years. So fraud is a big issue across consumers and businesses, and that's one of the big reasons we're here today. And the first question I have to the panel is, have you seen fraud evolve in the last 2 to 3 years? And definitely, as I point out, it's growing. I'm sure our audiences want to know, what are some of the common types of fraud you're seeing? And how much impact have you seen on your business or customers? Alex, you want to kick it off here?
Yeah, sure. Thank you, Aditya. I think the main point is fraud became mainstream. 15 years ago, being a fraud analyst was the coolest job in the world. Now being a fraudster is the coolest job in the world. So what a time to be alive. But I think what we've seen the past 3 years is really people realizing that the entry to the fraud market is so easy. You can watch 3 hours of YouTube videos, and you can pretty much get started of becoming, taking your first steps as being a fraudster. But also we see that the hackers, the veterans who've been in that space for many, many years, they understand that they have new customers. So they migrating from offering their stolen information from the dark web, migrating back to the deep web. So now you have all those marketplaces. Now you have platforms like Telegram who pretty much offer fraud as a service. So fraud is here, fraud is mainstream, everybody's doing fraud. And I think the biggest point is that the fraud is not very sophisticated because those fraudsters that come by the masses, they taken their first steps, but the volumes of fraud are insane. Some institutions report X3, X5, X10 fraud than what they've seen before the pandemic. So I think this is the biggest point for me.
Yeah, do you want to go ahead and share what you see, Jason?
Yeah, I mean, I think we need to realize that fraudsters, criminals, operate in many cases like a business, and they respond to incentives and they respond to opportunities. I mean, it's not going to be, any big news that fraud expanded dramatically over the course of the pandemic because record amounts of money was being shoveled out of the government towards small businesses, towards consumers. And that was a very, very rich and, more importantly, easy target. In the case of PPP, for example, the trade-off between speed and friction, and the imperative was, get these funds to consumers quickly, whether it was PPP or expanded unemployment. But the trade-off of that, of speed, particularly when it comes to the government, is not always doing it with efficiency or the necessary care, right? So I think that really supercharged the kinds of problems we're seeing, and even with the drawdown of some of those programs, I don't think that problem is going to go away absent the different players in the ecosystem putting in place the adequate controls to mitigate those risks.
What do you think, Jeff?
Yeah, I think there's new fraud every day coming about, new themes, but a lot of it is old and recycled. So the biggest suggestion I have for folks out here in the fintech space, take advice from your friendly banker. A lot of them have seen it. A lot of them have put use cases in place before within the banks. So now these fraudsters are seeing new opportunities to enter into the market. They're taking the same playbook and coming after you in those cases. So listen to your bankers. Listen to what they have to say. And that's my biggest advice.
I think to Jason's point, when we talk about government fraud, I believe the last number I saw was $140 billion that was misappropriated. So these are big numbers. From a banker's perspective, I've seen fraud change in the last 3 years in terms of card fraud. With EMV being deployed, it went to card not present. That's about 92% of the fraud losses that my bank is seeing. Check fraud is tried and true, that they go back to check fraud every time. Now they are stealing mail out of those UPS boxes. UPS is telling you not to use their secure boxes because they're stealing the mail, they're stealing checks, and then they're creating them. So that is also something we're seeing. And then also synthetic ID. So a mixture of true identity theft along with some false information, creating sort of a new ID to create accounts. I think are probably the top 3 that we're seeing right now.
Okay. So clearly fraud's evolving, but it's also tried and true, and what's old is new. Sounds like everything is coming full circle. So I have a question for you, Diane. How are you trying to get a holistic view of fraud and its impact on your business and customers? What are the tools you're using, or processes, or technologies, or just alignment?
So one of the biggest assets I think I have at hand is I have a lot of peer networks. I rely on those in the business to work with me when it comes to fraud. We're all on the same team. We don't want the fraudsters to get the money, so we work together. Main Bankers has a security team, so we meet monthly to talk about fraud trends. Maybe my bank isn't seeing it, but another bank is, so they will let me know what they're deploying, what they're seeing, so that I can be proactive. I'm also a certified fraud examiner, so I partake in all of those conferences, and I'm networking in that space. So maybe Maine isn't seeing it yet, but there could be other places that are seeing fraud. So I'm really leveraging all of my networks, along with leveraging the expertise of the vendor partners that I work with, and leveraging the tools that I have at my disposal, so my transaction monitoring system.
Okay, great. So Jeff, you want to jump in, share how you guys tackle it with your customers?
Yeah. In the banking as a service space, the customers split a little bit. The fintech is owning the user experience, the front end, the talking to the client and stuff like that. But at the end of the day, the bank is behind the scenes, tracking a lot of the transactions. They're seeing a lot of the fraud opportunity. So it's about working together. And a tool like Unit 21 and the product that they have out there with the parent-child relationship, and giving the bank and the fintech really that opportunity to investigate and look at fraud cases and transaction monitoring together as a team is the best tool available on the market, in our opinion, right now. And it helps folks really beat the client, beat the fraudster from trying to take over the accounts.
Yeah, and I think from a fintech perspective, as I was leading a fraud program at a neobank during the pandemic, definitely going to your partner bank and really have an honest conversation with them of what are the KPIs that the fintech is expected to meet, what the bank expects you to monitor in terms of transaction monitoring, and then go to your vendors and really your fraud stack and see what your vendors can offer to you in order to meet those KPIs.
So great. Clearly, there's a lot of coordination that needs to happen. At the same time, education to be aware, and not just yourself, but from your peers, as well as the entire company needs to be on the same page, is what I'm hearing a lot. And tools help you do that, but you also have to have that mindset to go about it. So next one I want to ask is, like, in your opinion, can you prevent fraud if you've never experienced it? I'm going to give it to Jason here to start off here.
Yeah, I mean, I think the short answer to that is yes. I think the longer answer is, even if you're a early stage, newly launched fintech, which is kind of the audience that I tend to spend a decent amount of time with, when you go to market, we were chatting before we all came out here, you don't want to be that fresh meat and be the target in the eyes of potential fraudsters. And as I said before, it's like incentive opportunity. When you have a newly launched company, in the fintech space, in the financial services space, you will immediately be probed for weaknesses in your fraud risk, in your KYC, AML, credit risk underwriting, et cetera. So you are a target. You need to be ready from day one to monitor, detect, and mitigate those risks. Is it going to be perfect? No, of course it won't be. I mean, I remember when I started, and this is more on the credit risk side, but when I started at LendUp, I think our repayment rate was 50%, which is not very good if you want to be a profitable business. So it's not that there isn't going to be a learning curve of refining those models, but if you just sort of turn the lights on and say we're open for business without any sort of reasonable approach in place, you're going to lose your shirt. That's where vendors, and to your point, networks come in to building those fraud defenses, as well as the other sort of areas I mentioned, risk controls in from day one, from day zero, really.
What do you think about that, Dan?
I definitely agree. I think it's a matter of leveraging the expertise of the vendor partners, like a Unit 21, on what they're seeing, what they recommend, maybe as your starter rules for fraud. I also think it's leveraging the knowledge and expertise of your sponsor bank. They are seeing this, they're living this, they know this, rely on them, leverage that expertise. And we might not get it perfect, but we're going to at least set you up for success.
Yeah, it's a numbers game. So any startup wants to come out, be as efficient as they can with their money, and fraud prevention isn't necessarily a profit center, right? And that's not what folks are thinking, but it can definitely be a company killer. So startups or founders need to really think hard. Do they want to wait and sit back and wait to invest in fraud monitoring tools until they start losing money and potentially start losing a lot of money and put their company at risk? Or do they want to get ahead of it, start up front, never have that concern, never have that conversation, and spend a little extra money up front on this and do it in a safe and sound way?
Yeah, and I think if you are a risk manager at an early stage fintech, you should really have an honest conversation with your product team. You see, product teams, they have the tendency of thinking about the perfect customer taking the perfect path, but they don't realize that the perfect fraudster will also take the perfect path. And if you help them to design the product in a way that it's, on one side, allow growth and allow the very good experience for the customer, but on the other side, really keeps from bad actors out and really making sure that only the customers who deserve to get certain products or certain features really get those. I think you can really go ahead and, like you said, Aditya, prevent fraud before it happens, before you experience it, if you have a smart product with a risk taken into consideration.
So basically, the mindset has to be there that like I can prevent it, and I'm not going to be fresh meat, as you guys said.
Well, think about it that way. Everybody say, fraud is evolving, but fraud, before it evolves, it shifts. And it will continue to shift until the opportunity is exhausted. But since new fintech companies come up every day, it will just keep shifting. New fintech offers ACH, they offer check deposits, they offer all those type of products that fraudsters love. So there is no need for fraud to evolve as long as it can keep shifting.
That's a great point, because that means as more companies get funded or more fintechs open up, and they don't think about prevention, and they think of it as an afterthought. They're just, instead of shifting your fraud, evolving your fraud, you just shift to the next vulnerability in the next company. So that leads us to our next question, because it's a valid point. How can organizations be prepared to tackle fraud? What type of team have you guys built versus where one, it does well, or where the team hasn't done so well? Like, what are the differentiators here? And maybe kick it off with Jeff.
Yeah, the teams that have done well are the ones who think about it at the very beginning. They think about their go-to-market strategy. They think about the number of eyes that they're looking to get into the door, and then they have an equation of, okay, how many of those good eyes, how many bad eyes will come with it? And then they're going to build a team around it, put numbers around it. And the best teams that they built are folks who have seen it before in another space. I said at the beginning of this talk, listen to your friendly banker. Go hire one too. Folks that have been in the banking space have seen this before. So as you're starting a fintech company, honestly think about someone who has done it in the banking space before. So that's one of my biggest pieces of advice.
Yeah, I will echo Jeff, and I will say that a very good collaboration between the growth team and the risk team. Really understand who are your organic customers, who do you expect organically to onboard to your fintech, understand the different acquisition channels that you will be operating in, and help the growth manager understand that when you talk about lifetime value, you need to take risk into consideration. And really don't look at how long the customer been with me, how much money he put in, how much money he spent, but also realize that that customer might be a fraudster, might be a money mule, might be a bad actor, and help the growth team take risk into consideration when they go to market.
I mean, I would certainly echo that point, as well as the one you made about collaborating with and clear lines of communication with product management teams, right? So I mean, if you sort of think about that as a life cycle or as a funnel, it's like, okay, what are we building? Who are we expecting is going to use it? Where are we going to acquire those users? And then once we've acquired them, are they performing in the way that we thought they would? And are they profitable? And I think particularly in smaller startups, it can be easier to have that kind of close collaboration and data sharing almost organically, right? If you're 10 people or 15 people, everyone kind of is going to know what's going on. As companies get bigger and the people become siloed into departments and potentially the data becomes siloed, it can become less clear, particularly if KPIs or OKRs, and especially if there are bonuses attached to those, are like, oh, well, my goal this quarter is to drive so many users at this CPA, and that's the only thing I'm paying attention to. And if you're not actually looking at what is happening to this cohort I've acquired with this awesome $50 sign-up bonus, what is the quality of these users, how many are real, how many are signing up for the bonus and then churning, and how many are just straight up fraud, like you're creating a really poor incentive structure.
So likewise at the bank, I work with all of our business line leaders. We do risk assessments. Where are gaps? Where can fraud potentially be exploited? Making sure that we have controls in place. Also on my team, I oversee the AML division, the account fraud division, as well as the card division. So we have prepaid debit and credit cards. So it is one team under my leadership. So there's a lot of collaboration. There's a lot of communication. We may not have caught the fraud initially, but money laundering is money from an illicit source being moved through the financial system, so we may not have caught the fraud, but we can catch on the money laundering side, and those teams are communicating and making sure that they're talking and that we're catching things as early as possible.
So you get prevention because you have everything under one. So you see one side, it pops over to the other side, is what you're saying. Correct. Over time.
Yeah, I just want to touch on what Jason was saying too, where I think that's so important, where it's not just a fraud team, it's the entire company. So having the entire company bought into really understanding the risks of fraud and really how it could be a company killer potentially, and everyone bought in. And looking at those numbers, just like they're looking at weekly sales numbers or whatever top line KPIs that the company is holding valuable, fraud should be up there too.
Yeah, so I think we've heard a lot about fraud, how you can stop it, prevent it, how you need to build teams for it. And so one question that, as we were preparing for the panel, I wanted to actually get real examples of fraud. And one of the examples that the panelists shared, I'm going to transfer to them, and it was really interesting. So with that, Diane, do you want to share one of the examples that recently experienced?
So that's a nice segue in from what I was just talking about. So Jason had talked earlier about the unemployment fraud that we saw. The government may have really pushed to get money in the hands of our consumers and our neighbors at a very interesting time. What we found was we were actually one of the first banks to report to the state of Washington that their unemployment insurance had an issue. We found that because the money was coming into one of our customers' accounts. This gentleman lived in Maine, and he was receiving unemployment insurance into his account in the names of other individuals, and he was immediately trying to wire the funds out. So that is their classic money laundering. There was a fraud conducted. He thought he was getting money from his mother's brother's uncle, from someone he met online. And in terms, it was actually fraud. We called the state of Washington. They had no idea that they were being exploited. It was already in the millions by the time they dug into it from our tip. We immediately got on the phone with Secret Service. We worked with FBI. And then the number I shared earlier, it ended up being $140 billion lost between PPP and the unemployment insurance. And it started with knowing our customers, having a reasonable expectation of their activity, what made sense for them, and it simply didn't make sense that this gentleman was getting money from the state of Washington when he was a Maine resident.
Yeah, that makes me laugh because I'm not sure how else to respond because that's just like mind-boggling. I live in Maine, but I'm getting unemployment from Washington. So, I mean, it comes back to all the things we said, knowing your customer, being aligned so you can find these trends, find these issues. I'll hand it off to Jeff or Alex to share any of the stories they want to highlight.
Yeah, I was at a time at a fintech, at a neobank, seeing pretty much the same thing. State of Florida is always at the top. We've seen pretty much the same thing. But I think in general, what I realized during the pandemic is that if I was, before the pandemic, I was looking always for those compromised identities. I was looking for the synthetic identities. Now I realize that a legitimate KYC application where everything looks great, everything's correlate, it really, the person who they say they are, they will end up as a money mule or first-party fraud, and they will do the unemployment fraud.
Yeah, I think these examples are great. Jason, anything you want to add?
Yeah, I mean, I would also point out that this stuff doesn't always need to be high tech, right? Multiple lenders I worked for, we had an income verification flow where, we would try to ping TWN to verify their income. If that failed, we would do some other things. And one of those would be the option of uploading a pay stub or W-2, very classic old school way of doing VOI. And it's like, what's the first thing, one of the first things you find on Google if you type in like pay stub is fake pay stub generators. And if you're dealing, and this was the case with some of the companies I worked for, where you have a potentially young or not super experienced CSR who's reviewing some of this documentation in the loan application, they may not know the right signs to look for unless they're trained to look for that. And that's a very unsophisticated kind of fraud, but it still happens.
Yeah, that's definitely key in being aligned, as you guys said, and now looking for things and setting up your team. So a whole host of knowledge. So with that, I'm going to turn it over to Q&A to the audience. So we'll take a few questions here and wrap up the panel afterwards. Go ahead.
What are some challenges you have had at Bangor around fraud and fraud ops?
I think sometimes it can be a challenge to rein in those product teams. I think we've covered that here on the panel. They have incentives to sell and to onboard and to bring in new business. So I think it's important to have a really great relationship with those individuals and work together to ensure that you're doing it in a safe and compliant manner. I think also one of our best attributes and also one of our biggest challenges is that we have a slogan called "You Matter More." Those are words that we die by. We mean it. We want every customer to feel like they had the best experience every time they interact with anyone that works at the bank. And sometimes that can be a challenge if maybe there's a red flag or two. You don't want to give the customer a bad experience, but is it truly really the customer that you're dealing with? So I think finding that balance of great customer service and fraud prevention.
Go ahead.
So there was a bit of conversation around synthetic fraud and some of the fraud trends related to synthetic and otherwise, and a lot of talk around stopping fraud, like check fraud, transaction monitoring. When a synthetic fraudster or someone creates a synthetic identity and opens up an account, in a lot of ways they behave a little bit differently sometimes than a typical third-party fraudster. They wait time, they build up credit, things along those lines. What tools, if they're different, for example, from traditional fraud tools, do you have in place or have you seen or do you utilize to specifically deal with synthetic fraud?
Yeah, thank you for the question. I think, first of all, if you look at synthetic fraud and third-party fraud, you can build different models, machine learning models, to start understand how those entities, like you said, they behave differently. But also, when you try to detect synthetic fraud, try to understand at what point exactly this synthetic identity will try to take leverage of you. And try to build a prediction that is good enough for you to be able to stop it right before it happens. It could be a bust-up fraud, it could be anything else, but when you see enough of those, you will be able to build a strategy around it.
How do you balance driving growth of the business while keeping fraud in check?
The question was, how do you balance the growth of the business while keeping fraud in check?
I mean, just real quickly, and not to be too repetitive, I think it is about building those shared and socialized like OKRs or metrics, right? Like if you have a marketing team who only cares about CPA, they're going to be incentivizing to potentially problematic marketing sources versus building shared metrics towards the bottom line business outcome and defining that in a way that people are aligned.
I was just going to add that I think it's important to collaborate with your risk partners to understand that this is a true risk, and just leaning on the people that see it, because fraud will put your business out of business quickly if you're not leveraging the resources that you have.
Thank you all for taking your time. I'm Trisha, one of the founders and the CEO of Finish 21. So we write a lot about fraud trends, but I'm curious for the three of you who are not part of the Unit 21 team, what are the trends you are seeing today in fraud that you think the audience should prepare for in 2023 and beyond?
I think we touched on some of it. It's really shifting traditional fraud over into new spaces. So it's really the founders and new teams coming into the space, really just educating yourself on the past. History repeats itself, and don't let it happen to you. It is a big part of kind of what we preach to our fintechs coming through, and what I know our banks like Bangor are communicating to the fintechs coming in the door and starting businesses right now, is educating them on the past and what's happened so it doesn't get repeated.
I don't know how I can top that. I think it's the same. It's leveraging the expertise around you to ensure that you're doing it in a safe and sound manner to protect yourself from the fraud.
Yeah, and I mean, I would add, with the launch of Clearinghouse RTP and FedNow coming in June, there's a lot of chatter about how different players across the financial services ecosystem need to prepare for that, right? And we've seen, even with Cash App, Venmo, Zelle, which are in a sense not truly real time, although present largely as such, we've seen bad actors take advantage of those channels to defraud consumers, particularly those who might not understand the risk that they're taking, right? If you've always been a Chase customer, an Amex customer, and something goes wrong and you can lean on your credit card company or lean on Reg E to make it right, they may not realize if I Venmo my rent to the wrong thing, like the wrong address, I am never seeing that money again. And so I think it's also, I have not done that, I swear. I think it's also incumbent on the companies, whether it's fintech or bank, to not only educate consumers, and I think that's an important part of it, but also ideally design products in a way where that protection is built into the UX, is built into the product.
Great. Want to say thank? You got a question? Go ahead.
When we think about banks and broker-dealers specifically working with each other, the SEC and FINRA can potentially allow them to go beyond just relying on each other's collection of PII for the KYC process and actually allow them to rely on their verification. I think there are a couple reasons why anyone would want to rely on each other's verification if they can, maybe from a cost perspective or to reduce friction within the activation funnel for account opening. So when we do diligence on each other in terms of what each other's process looks like from a KYC AML perspective, what kind of specifics should each party really be looking for to make sure that the protocols and checks in place are something that we can just rely on a go-forward basis?
Yeah, I think I would say when you look for a good KYC program, don't only look at does the program understands if the applicant who they say they are, but try to understand if the program can learn about the correlation between the entity and the device that they're using, the entity and the email that they're using, the entity and the phone. So all the non-PII elements that you can collect during the process and try to understand how they correlate with each other. And if you do have a good match of correlation, that's probably a good practice.
I mean, I would also point out that KYC is like a legal regulatory compliance requirement, which is not necessarily the same thing as preventing fraud, right? So it's like it's one thing to be able to look at somebody else's KYC and BSA program and say like, okay, based on our review, we're comfortable that like you're going to pass a supervisory exam. It's a different thing to say, is this adequate to mitigate fraud risk to a level we're comfortable with, right? I mean, those are not, there may be an overlap between those two circles, but they're not, there's kind of different spheres to a certain extent.
Great. So I want to say thank you to our panelists for answering questions. They'll be here all night and answer your questions. So give them a round of applause. With that, I want to give a shout out. We're going to be at Empire FinTech tomorrow as well. Stop by our booth. We have some goodies. As well as tonight, before you leave, we have some goodies for you guys as well. And with that, I'm going to hand it off to Priya, who's actually an early Unit 21 employee, and is going to demo a little about the product in terms of the fraud as well as various use cases. So I'll let it take it from here.